Looks like it's being accumulated. We've got a position in.
Yeah. Lou, Anaconda. I buy. Yeah. Take it and bid it.
If I'm right, eighths and quarters won't matter. I'm taking Anaconda.
This is really special. Anaconda.
Buy another 50,000 Anaconda.
Bet the ranch.
Buy 100,000 shares.
Wildman is sticking around.
It's on automatic pilot to the moon.
If it hits 75, we could clean close to 24 million.
Thanks, pal. First lesson in business, don't get emotional about stock. Clouds of judgment.
1 year ago. Yo, AK, here's a video idea. Do 3 investing lessons we could learn from the movie Wall Street. I think it could be even bigger than your billions videos. Cheers. And then my response. Yeah, def man. I've had that on my list for a while. Gotta stop being lazy. Haha. Thanks for the reminder. God damn it, AK. 10 months ago. Devin, do a video on the movie Wall Street, for God's sake. Sorry if I sounded a little dramatic. It's really no big deal. It's just that nobody has done it yet and it seems like such a good idea. Then my response. Haha, I will, after this season is over. What's so funny, AK? Why are you always typing haha? 7 months ago. Devin, I'm ready to see those finance movie reviews, but I'll be patient. And here we are 7 months later. And Devin, it's finally time. It is time to break down the classic movie Wall Street. And I'm sorry, Devin, I know you've been waiting forever. Every time you've clicked a fallible video and said, hey, this is still not Wall Street. Damn it, AK. Just the disappointment over and over again for hundreds of videos. Oh. But now it's time, Devin. I am gonna beat this movie Wall Street into the ground with analysis. You're never gonna want to watch it again after this, I promise. It's all for you, buddy. All for you. Speaking of Buddy, there he is right there. Yes, one of the main characters in this film. Charlie Sheen, along with Michael Douglas, who's the one that everyone started idolizing after this movie, and Daryl Hannah, who is just horrible. But yes, Wall Street is a classic 1987 movie by Oliver Stone. It's a really well done movie, and I haven't seen it in years. I just rewatched it to do this video series. Very, very good. And this guy right here, Michael Douglas, Gordon Gekko in the movie, he inspired a whole generation of Wall Street folk. That's something we'll talk about in this series, because he's one of the big guys that made Wall Street cool. So going back into this movie, when I was watching it, there are just so many investing lessons, which is exactly why Devin said to do the damn thing, and now I'm doing it. So in this video, we're going to talk about Gordon Gekko's advice to keep your emotions out of investing. It is timeless advice and so crucial to actually making money in the stock market. But before we get into it, I just got to let you know that we just opened up our brand new training program, Strategy Builder Pro. So in Strategy Builder Pro, we teach you everything you need to know to build your own professional investment strategy. There's a link down below in the description and comments. You could learn more about it. Make sure you check it out because it does close Sunday. Okay, but back to the movie. The thing I really liked about it when I was watching it this time, because I was like really trying to analyze it, it's just so great to see the progression of Bud Fox. Who is this guy right here, Charlie Sheen? He's kind of the young broker who gets under Gordon Gekko's wing, kind of like his protege. And throughout the movie, his personality changes, he learns different lessons, and he gets royally screwed. But along Bud's journey, that's where we get a lot of the investing lessons. And what's funny is that his name is Bud Fox, but it was actually supposed to be Joe Fox because he's modeled after a real life trader, but that trader didn't want his name used in the movie, probably for a good reason if he was doing shady stuff too. What's more interesting is that Tom Cruise actually wanted this role, but Oliver Stone gave it to Charlie Sheen. And I mean, I like Charlie Sheen in 2.5 Men and stuff, but Tom Cruise, like, I love Tom Cruise. I can't even imagine what this movie would have been like with him in it. But then again, with the way that Bud Fox gets beat up in this movie, I can't imagine it being Tom Cruise. He's too much of an American icon. He would never get beat up like that, even from the great Gordon Gekko. So maybe Charlie Sheen was the better casting choice, and I like that in the movie his father was his real father because Martin Sheen played that role, so they gave a nice dynamic. But anyway, let's see what Buddy learned from Gordon Gekko about emotions in investing by the end of the movie.
Fox, where the hell are you? I am losing millions. Now, you got me into this airline. You sure as hell better get me out of the only job you're ever gonna have on this street is sweeping it. You hear me, Fox?
You once told me don't get emotional about stock, Gordon. Don't. The bid is 16.5 and going down. As your broker, I advise you to take it.
Oh yeah, Sweet Revenge. And if you don't know what I'm talking about, I mean, just go watch the movie. I'm not gonna try and avoid spoilers because this is from 1987. But let's get into why you do need to keep your emotions far, far away from successful investing. This is really the first rule you gotta learn about investing. Well, actually, the first rule is don't lose money. So let's say this is the second rule. Emotions and investing do not mix at all. All that happens is that you end up losing money. So everyone likes to think, especially after watching a movie like this, that they're the hero in their own movie when they're investing. They're on Robinhood like, ooh, I got a feeling. I think I'm about to make a bunch of money on this. But the truth is that rarely, if ever, works out in your favor. And I know because I used to do it all the time. Lost a lot of good money. Most of the time, that feeling that you get when you're investing, the gut feeling to do one thing or another, it's wrong. And if you follow it, you lose money. Because it's always in retrospect that you go back to those emotions, those feelings you were having, and you're like, oh, I felt the wrong thing at the exact wrong moment. You were really scared at the wrong time, and you were really greedy at the wrong time. And you can't feel bad about that. It's normal. Everyone, every trader has those emotions, from the professionals to people just starting out. And that's why you got to completely separate it. So the big difference between the professionals and the amateurs is that the professionals have separated it. So the way you got to think about the market is that it's there to manipulate you. That's Mr. Market's main job. And the reason why it works so well is because there's money involved. It's your money on the line. And as the wise broker Lou in this movie, who Bud should have used as his actual mentor, because he was giving out actual good advice the whole movie, as he said,
Blue Star, Mr. Mannheim. Put all your clients in it. It's gonna move.
I don't know where you get your information, son, but I don't like it. The main thing about money, Bud, it makes you do things you don't want to do.
So of course, in this particular circumstance, Lou was referring to insider trading. But what he said applies to our example too. Mr. Market can manipulate you because there's money involved. And the reason money makes us so emotional and prone to doing stupid things is because it gets equated with our base human desires. So you can go back to Maslow's pyramid. Remember this, the hierarchy of needs? Well, at the very bottom of this pyramid is physiological needs like air, water, food, shelter, sleep, clothing, reproduction, and safety needs, security, employment, resources, health, property. Well, as you can imagine, money is closely tied to both of these things. And again, Maslow's hierarchy, if you haven't heard of it, is just the hierarchy of human needs. Like you need this first, then this, then this, then this to survive. So the stuff at the bottom of the pyramid is like very obvious, right? You need air, need water, need food, shelter. And these things, how do you get them in the modern age? Well, you gotta buy them. And how do you buy things? With money. Same thing over here. If you're poor, a lot of times you're not safe. You might not have a good job, might get laid off a lot, may live in a place that's just straight up not safe, your personal security is at risk, don't have enough money to pay for healthcare. The list goes on and on of the things that we need in those two categories, and again, they're all tied back to money. So when people are getting wild in the stock market, it's not just because they're like super greedy or something, it's because that money, and just money in general, is equated to all the base desires we all have and need. You go up a little higher in the pyramid and it's no different. I kind of tie these two together, the esteem and love and belonging, but everyone wants to be accepted and respected in their group, and a big part of that, for better or worse, or how you get that respect and love, is financially. Now, it shouldn't be like this, like people should love you, you know, and respect you regardless of if you're rich or poor, but that's not exactly how our brains work, right? This is why everyone's trying to keep up with the Joneses. It's why you get on Instagram and you feel terrible because everyone's posting, you know, vacation pics or something, spending money that you don't have, and then you kind of feel like an outcast. And again, no one wants to feel like that, because back in our tribal days, you had to be accepted by the tribe. If you weren't liked by those people, you'd be kicked out of the tribe and you'd be forced to live alone, and you'd probably die, get eaten by a mountain lion or something, or starve. So again, this pyramid and these base desires go way, way back in time, and they all kind of get wrapped up with money, which makes movies like this such a good drama. You gotta love it, right? So again, it's a tough thing to say to keep your emotions out of investing, because how are you going to be objective when there's that much money involved? Because most of us, you know, if you work at a job, you have a ton, your whole life savings in the market. That's how our capitalist society works, and it's not a bad thing. It's, you know, very helpful, but at the same time, it can be really scary, like in a 2008 scenario. People even take their own lives when it comes to financial losses. And if I remember right, we actually see that in the sequel to this movie. I haven't watched that in years, but it's serious stuff. So then what's the solution to controlling your emotions when you're investing? Because you don't want to get them involved, clearly. Well, like you've heard me say a million times, the solution is to stick to your strategy. And to stick to a strategy, you got to have the right strategy. So the big thing right now, you know, that every financial advisor will tell you, and all these different programs online, is to invest in an index fund and sit on your money until you retire. Now that sounds great in theory, but in practice, what happens during a 2008 crash scenario where you're seeing 50% or more of your wealth just disappear like that? Do you think the strategy of just sitting on your money until you retire is going to work? Or do you think your emotions are going to come flooding in, you're going to be really scared and try to sell out? And of course, in retrospect, fact you end up selling out at the worst time and destroying your retirement? I'm gonna guess the latter with the emotions. And I'm not gonna say like buy and hold is a bad strategy, because it's not if you can do it. But you gotta be realistic with what you can handle. And in this case, I would assume that you can't handle it. I can't handle it, I know that. And I say assume because it's tough to really know until you're in that scenario. Because you're not gonna know how it feels to lose 50% of your life savings until it actually happens. No good simulations for that. So that's why, in my opinion, a better strategy that you can actually stick to has some good risk control in it. So what's risk control? It's just managing your money based off your risk tolerance. So you could just make rules. So for example, you could say, okay, if this stock drops 20%, I want to exit. I want to sell my shares. And then you have some more rules saying, hey, if it pops above this price level, if it's above $90, I'm going to get back in. Now, this doesn't necessarily have to be day trading or anything like that. It can be long term. Like for example, me and my strategy, I have long-term rules that I follow, and I end up only making trades once or twice a month. So it is more long-term investing. But the key though in that strategy is that it fits with my own risk preference. I'm deciding where I want to buy, where I want to sell, and that works because it matches my personality. You need to fit your strategy to your personality so you can actually follow it. I can't do buy and hold because I don't want to risk that 50% drawdown. So maybe in my case, I could only handle a 10% loss. Another person might be able to handle a 20%. And whatever strategy you build around your risk tolerance can still work. You can still do really well in the market. But like I said, the key is that it matches with you, because the way to keep your emotions out of the investments is to build that strategy, build those rules beforehand, have it set, have this set of rules saying, hey, I'm only going to follow this. I'm not going to do anything different. So then when you actually bring it to the market, right, and your money is actually in the market, which is immediately when your emotions will start flaring, you could just turn your brain off and be like, hey, I already made this list of rules. This is what I'm going to follow. And I made this list when I was, not in this emotional state, before I had my money in the market, my rational, objective self. And I can trust that guy. I can't trust this guy right now who's feeling all these things, but that guy is a trustworthy dude. And that's when you can be like, all right, I'm feeling all these things, but let me just shut it down and do what this thing says. That's called execution. And good execution is what's going to make you successful in the stock market. Execution without emotions involved. But again, to be able to do that, you got to be able to build your strategy, something that you can follow along with. And that's why I'm excited about Strategy Builder Pro, because I talk about this on this channel all the time. But now we put together the actual steps. Like we go through every part of an investment cycle. How you find the investment, next how you enter, how you exit, how you manage the whole thing. Because here's a secret they don't tell you about the stock market. Picking the right stock, that's only 10% of the game. Even in this movie, they only focus on like, oh, Teldar paper or Alicot steel. But that's not so much what makes the money. It's like after you pick the stock, how are you managing it? That's where all the money comes from. And it's also where a lot of money can be lost, because once again, if your emotions get involved, make you do the wrong thing, you screw yourself. So anyway, check this out. I'm pretty excited about this training program. There's a link down below in the description and comments. And again, check it out now because it closes Sunday. And also make sure you comment down below with any scenes you want me to break down from this movie. I got a whole list, so we're gonna do a bunch of these videos. Unless you guys hate them, which in that case we won't, but do it for Devin. Look at his smiling face. I bet he doesn't even smile like that anymore. I just want to bring that smile back to his face. All I need is Mike Douglas's help and yours. So let me know down in the comments, like this video, and subscribe. Definitely subscribe. Hit that notification bell so you get an email notification when our new Wall Street movies come out. It's a series, and by the time it's over, we'll be jumping into billions too. Few months, it's almost back. But yes, subscribe, and I will see you in the next video. And don't forget, stay fallible out there. Bye.